Good afternoon. Welcome to today's session, which is Driving Climate Finance at Scale through Development Finance Institution. Let me unbundle that for you. First, 3 examples. We in MIGA, the Multilateral Investment Guarantee Agency, have guaranteed $1.2 billion of market finance through Banco do Brasil for farmers in Brazil for adaptation. Another example, we have done over $500 million with Bancoldex, which is a DFI, Development Finance Institution, in Colombia for small and medium enterprises and tilting them towards investing in technology that's more green. In Africa, in the TDB, we're doing trade finance to enable more finance of, if you will, green financing. All these examples are examples where we connect guarantees with development finance institutions to actually scale up green finance. And the question we're going to ask today, is this the hidden instrument that can be really scaled up to make an impact on climate? Can we get guarantees of MDBs to bring market finance into development finance institutions, which are platforms to really scale up investment in climate, and climate in terms of adaptation and mitigation? We have a fantastic panel here. Let me welcome Mr. Norkulov, the first Deputy Minister of Economy and Finance of the Republic of Uzbekistan. We're also joined by Luis Azevedo, IDB Investment Chief Strategy Officer, and our colleague Mr. Diouf, who's the Special Advisor to the President of the West African Development Bank. So let's see what our panelists have to say about this connection between guarantees, DFIs, and really getting climate finance at scale. Deputy Minister, maybe I can begin with you. Traditionally, when we from the World Bank Group or MDBs come to countries, we're talking about loans and lending. To what extent have governments and your government begun to really think about using guarantees to draw in market finance rather than direct borrowing from MDBs?
Hi to everyone, and Junaid, thank you very much for organizing this very interesting panel session and inviting us to participate in this. This is very important topic, and you put, the very important question at the beginning, that how are there too many hidden potential to scale up climate financing for, using the guarantees. And this is very important, and I can bring a good example in case of Uzbekistan, and to have an overall feeling about our country. I have to mention that the country is growing very fast in the new era of reform, last 7-8 years. We started huge market and structural reforms, and the country has been able to sustain the positive trend of the economic growth, even the COVID and pandemic period as well. So, and despite the situations and the geopolitical conflicts and the tensions in the world, the economy of our country is growing very fast thanks to the sustainable and irreversible reforms. And the country is also, the population is also growing. The average growth rate is 6%, and you need more and more investment, and the demand for investment is growing like 2 or 3 times faster than the savings. And the only thing is that where you can find the money. Then, of course, we have been using efficiently the opportunity with MDBs. And basically, it's starting. We can, in the context of this COP29, we have been able to put in place almost 4 gigawatts of renewables. It's more than $4 billion US already in the operation, and we have already signed more than 25 billion PPPs. And by 2030 we are going to achieve the share of the renewables by 40%, which is very important for the fast-growing economy. We have 2 challenges. One is that becoming less dependent on the fossil fuels, and also, increasing the dependence, reliance on the more green energy. And this is something that we are doing, I think, and we are proud. And MIGA has been also, supportive in this area. So I think MIGA has participated in 8 projects and with the total gross exposure of 600 million. But now, you know, these projects are going on and we need more and more demand, not all the energy sector. A huge bottleneck for the growing economy of Uzbekistan is the connectivity. And at the current situation, we are working on building the new toll roads. And, but our understanding is that the toll roads, the new roads, they may not be enough to resolve the issue. We need more railway infrastructure. And here we see that, you know, how NIGA or, you know, the international or supranational agencies can be, you know, can play a very important role. One thing is that, you know, this is the hidden, when you ask the hidden potential, we see that, you know, huge uncovered or unmet or unsatisfied demand in a railway service. Even if you go to Tashkent now, try to buy a ticket for the fast train, it's very hard to get the train. So you have to book it in 2 weeks before. And it's becoming a challenge for the cargo trains as well. So the infrastructure needs fast, but it's also have a good development in the future in the way of being a self-sustainable. So what MIGA can do is that, you know, can capture an early stage that this is the huge potential to grow in Uzbekistan because the economy is growing, the demand for the passenger and the cargo is growing. I'm just trying to bring one example in the rail, but it's also a green infrastructure. Instead of, you know, building the roads, so the road is important. You cannot avoid from this. The same applies to airports as well, which are important and where we can do. We are trying to do PPPs and in modernizing the local and, you know, the central airports as well. But in case of railway, where we started to transform the railway company, this is one example. The next one is that, you know, when the population is growing, am I not deviating from the time?
You're laying the grounds for a great discussion, but maybe if I could have you conclude and I could bring in the other colleagues.
So 15 seconds. And so the same applies for the green mortgage. When the country with the population is increasing, and what we can do is that, you know, support the local banks who are financing the mortgage program. And it's also, you know, very important, Junaid, you know, when the global leaders are loudly talking about how we can unlock the room or the space for the private investment for the green and the SDG infrastructure. You know, we see from our experience that there are regions that we can bring the private investment and very hard to bring because if it is the well-urban plant and densely populated areas where the capex is low and with a higher amount of the capture of the people, it's also a good opportunity. So, I mean, there are many things that, you know, the institutions like MIGA can directly and indirectly be involved. But one important thing is that I think it's about the thinking out of box and acting out of the box for institutions like MIGA would be to think not directly, you know, financing, but also open the future space for the future operations. One example I will tell with the Trade Financing International Bank, where they said, you know, we started to finance not only the trade transactions, but also the infrastructure. Where I said, we are not, you know, the institutions which finances the infrastructure, but he said, once this project will happen, we will see a 5 times increase the trade in of this country with the, you know, the neighboring region. So this will open us a space for huge demand for the trade financing in the future. So you could be directly, you know, or indirectly involved. And what I'm trying to say is that you have to be able to capture, you know, the future opportunities. And then the future opportunity in the case of Uzbekistan is the strong political will, growing economy, young population. Each year the population is growing up to 1 million people. And this, you have to be more and more involved in this,
Minister,
in this economy.
there are two things I take away from what you have said. First is the demand that is growing for investing in infrastructure and ensuring that infrastructure is a green infrastructure. in order to promote growth. That's one. Second is the use of guarantees, but be more creative in the use of guarantees to actually promote the growth of that infrastructure. What I have to share with you is that the growth of guarantees instead of direct lending is an instrument that continues to be catalyzed. Under President Banga, our president of the World Bank, all the guarantees of the World Bank have been brought under one roof in MIGA, precisely in order to create that kind of catalytic effect. Already, MIGA, with only $366 million of equity, has been able to deliver over $80 billion of guarantees. If we can do that with just MIGA capital, imagine now with this guarantee platform what we can do. So I'll circle back to your point that the demand is huge and we have to really use the guarantee platform in a more creative way. But before we go there, let me go to the second part of the puzzle that we're trying to solve. How powerful are the DFIs in actually providing climate finance? So if I could turn to my colleague Luis and ask Luis, IDB, to what extent is IDB as a development bank being able to really galvanize market finance into climate?
Thank you. Very interesting discussion, and so good to be here amongst former colleagues from the World Bank. First, I want to go back to your introduction when you mentioned two clients of MIGA, Banco Dex and Banco do Brasil, who are also partners and clients of IDB Invest, and the guarantees operations that you did that not only allowed them to expand their reach, but also came with packages of knowledge and technical assistance that help them to sharpen the focus of what they're doing. So I think that's another hidden benefit of some of these operations. But to your questions, I think DFIs are a fantastic platform to expanding climate finance. And we know our countries, we know the sectors we work with, but what's necessary is for us, and we have heard the call from the G20 last year in Delhi, to be quicker, be faster, be more efficient, and to optimize our capital and to mobilize more. And in that regard, I think the guarantees, the guarantee frameworks in general, and MIGAs in particular, offer a fantastic tool. And again, to your introduction, I don't think it is the only silver bullet. I think the needs are such that we need to tap upon all instruments that you have in the financing world and in the MDB world. But it's certainly one instrument that I think can be utilized much more efficiently and with a lot more innovation in terms of using DFI platforms to catalyze private finance. In our case, at IDB Invest, we actually started to pilot the process of MDB reform. We started with the adoption of a new business model approved by our governors that came alongside a fairly significant capital increase for us. But what the shareholders told us, which is very critical to the point of guarantees, is we are allocating additional money not for IDB Invest to do more of the same. We want you guys to raise your level of ambition and be different. We want you to leave the traditional MDB model of buy and hold and become a conduit to channel private capital into the region. And again, in that regard, the guarantees are a instrument that would allow us as an MDB to work with the private sector and to optimize and to augment the flow of capital to our projects and to our countries. And in particular, in our case of IDB Invest, last year in September, we signed a 4-year MOU with MIGA to work together. I'm actually pressuring our teams because it's been a year, and we are only now moving ahead with our first operation on trade finance that we hope to launch over the next few weeks. But I think this consolidation of guarantees under one roof, one platform, it will make easier to all DFIs to work because we know where to go to, who to work with. And I think that's, again, an innovation that President Banga brought about that I think will help in the expansion of this instrument. Thank you.
So very, very important point that you raised, which is while we all play the role of bringing in finance. With it, bringing in technical capacity and supporting the state capability is extremely important. So that is a part of MDB engagement that continues. But the other part is that as you are able to innovate, MIGA's ability to go from transaction to actually doing a wholesale agreement with you raises the ability to deliver more finance. Let me turn to Africa. A lot of thought is that guarantees are only for middle-income countries. 1/3 of MIGA's guarantees are for sub-Saharan Africa. In one particular area, we have been able to use guarantees to bring in off-grid access to electricity, as an example. But the question to you is, while we talk of many of the development finance institutions in middle-income countries, BOAD is doing incredible work in Africa. Could you share with us a little bit how you're positioning BOAD in the context of climate finance?
Thank you very much. Let me first recognize the great job that MIGA is doing in the, in our space. And you mentioned 3 great examples. I was expecting the 4th one, which is an agreement we just signed with MIGA, BOAD and MIGA, and that had helped us enhance our credit profile. And we're talking about the needs. In Africa, we're basically talking about $100 billion to fight climate change. 100 billion between now and 2030. That's huge. That's huge. There are 2 things when it comes to financing. You bring liquidity, or you bring your signature. And that's what MIGA is doing. As far as funding and providing liquidity, we are an investment grade bank. We don't have an issue, a problem accessing resources. The problem is different. The problem is, how do you access those resources at a low rate and at a longer tenor? That's the problem. You cannot finance development, through short-term loans. You cannot finance development with a 2-digit, interest rate. You cannot do that. So obviously, we are an investment grade, and we have access to resources. And the last time we've been into the market, that was 2 years back, we were able to issue a bond at 275%. Well, today, the figure will be quite different. And that's where really we need MIGA, and we've been seeing MIGA coming in and helping out. Obviously, we're an investment grade, but if you have a AAA bank or institution putting its signature on whatever deal you're doing, obviously it lowers the risk and it lowers the interest you're paying. And also it helps you to go longer. So that's really exactly what MIGA is doing, and which is great. And I think that that's what you need to keep on doing, to help us really reach because, when you're a development bank, it's not about how much you're getting. It's about how much you're impacting people.
Absolutely, absolutely. I think it's important to connect the dots here. The ability of MDBs to provide direct loans, for example, the World Bank providing IDA or IBRD, at some point you are reaching limits. Then you're turning to countries and say, well, you have the market today. So is there anything in between IBRD, IDA, and the market? And what you've just described is precisely the definition of blended finance, where if you can bring in guarantees, it lowers the market price, it increases the tenor, and brings it closer to IBRD in middle-income countries, though it may not reach the IDA by any means, but it gives you blended finance. And what we're basically trying to share here is to use guarantees to bring in that blended finance and use the platform of DFIs to address the type of investments that the Deputy Minister has raised in terms of countries' needs. I mean, this is, I think, a future of development finance that needs to be scaled up. Let me then ask you very quickly, and I'd like to turn to the audience to see if anyone will have any questions. So quick answers from your side, and I'll start from the development banks first. Do you see the growth of use of guarantees in your storyline?
Absolutely, and we're looking at it as a innovation, as a a new way of financing whatever we do. Obviously, and we've gone through that. We've gone through capital increase. We've doubled our capital, from 1.5 to 3 billion, but that's not sufficient. That's not sufficient. And when you have access to liquidity, the main game changer is your ability, and I'll come back to that again, lower rates and higher tenor. That's about it. That's about it. If you look at our countries, and we're doing very great in our region, we're talking about 6% GDP growth. I mean, some of you that are in this part or other part of the world might be looking at, while we're at 1%. We're talking basically about 6% GDP growth. So how do you finance an environment where you're talking about 6% GDP growth with an access to liquidity and to loans that is like a double-digit number? How do you do that? It's really difficult. It's really difficult.
Thank you for raising the issue of economic growth, and I think, Minister, you also raised it. In my opinion, as a Bangladeshi, I know that the best adaptation to climate shocks is how quickly you can have economic growth. Faster you bring people into higher economic growth, the greater is their ability to be resilient. So the ability to use finance with the type of programs that you do to achieve the economic growth of nations, I think that is the linkage that we want. IDB and your use of guarantees.
Yeah. Can you, yeah. Actually, I want to challenge ourselves, the development community, to go beyond the traditional. Traditional being what we've been talking about, how to employ guarantees, which is critically important and we need to do more of. But when you talk about the climate space, really pushing this agenda on climate, we really need to be able to innovate and to take more risks. And that's where we need to combine instruments. Just two blocks down, Brazil, right? My own country, 40 million hectares of degraded land, 20 million of which in the Amazon. Everybody's talking about forest regeneration in the Amazon. Forest regeneration could be a game changer in the Amazon, but it involves, amongst many, three main risks. It involves the carbon credit risks, because they would be traded in the voluntary market, big question. It involves the land tenure thing, big question. It involves, we are modeling some PPPs, IDB is modeling PPPs for forest regeneration in Brazil. The third one, it involves the government risk, right? And what our partners in the markets are saying, okay, if you do it on national parks, so the land tenure thing is dealt with, and if you get a guarantee for the government part of the contract, I will take the risk on the carbon credits. So nobody has done it. Nobody has done it in the world. We have an opportunity as MDBs to align instruments and guarantees and do something that can really be a game changer. That's just one example. I'm sure there are many others. So we have to use it more, and we have to use it also on this frontier environment for climate, in which we can really push the frontier and raise our level of ambition.
Wonderful point. And here I want to inform all of you that MIGA is beginning to use its guarantee to give certainty to the carbon credit market. And I think that's going to be a major source of income for the future. But we have to learn how to do it. This is all at an early stage. Minister, before we turn to the audience, the question to you. You have in front of you regional banks, development banks, and an investment guarantee agency. What would be your message to them?
The first message is a big thank you for all the support that MIGA and other IFIs are supporting this reform and infrastructure development programs. And, I will try to, again, to address the both questions that my colleagues, the second wave answered. there is a huge demand again. It will grow. No words. Because public borrowing capacity is limited. Every country is doing their fiscal rules, and then you have to follow these rules, and you cannot go beyond this. And then the international creditors will be reluctant to finance. The only way is that to turn to, again, international guarantee agencies, ECF, foreign ECF funds or banks. But, the thing is that I think what can be done from the lessons we learned, and what in this platform we have to discuss what are the, again, additional opportunities, is that to invest more and more in finding, the areas where we can work together with the international agencies like MIGA and I might be repeating some points, but we see huge things and opportunities because it's about guaranteeing the risks. And then you will not come and then say, okay, I will provide the guarantee for any other project, despite the what will be the outcome. But you have to see at least some kind of potential and opportunity. And there are huge things that we can work together. It's not about the direct financing yet, but it's about more and more investing in more and more analysis and details and finding the areas. I think that if we could slightly turn more, there is the work going on, and a bit more on this area. I can tell huge. The colleague from the Ministry of Energy is also participating here. We're now turning to PPPs and the lower distribution system. The electricity, and in some areas we see the loss like to 25, 30%, 15, 20%. And then investors are coming and saying that if we invest, we will bring down the loss to 5 to 6%. That's huge opportunity there. The government is anyway bearing the cost for that. And then I can bring these kind of examples in the pump stations, in the irrigations. And we have to, the MIGA can come and make a big, the reports and the noise and bring other private investors into the sector. So from this perspective, I see a huge and, growing potential for using the guarantees in developing countries, especially like Uzbekistan and maybe in other countries as well. Thank you.
No, thank you. Again, to repeat, the message here is market finance is interested in development, but it will be interested in development if some of the policy, regulatory uncertainties are de-risked. And so MDB is playing a de-risking role to crowd in market finance, but to do it not at a transaction by transaction level, but to use the DFI's machinery to do it at a programmatic level. And I think doing that, we will innovate more. This is the linkage that I think is going to be an interesting story of climate finance going forward in the COP today and in the future COPs. Let me quickly turn to the audience. We will probably have time for a couple of questions, but be direct onto your questions. There's a gentleman there. Can we get a mic to him, please?
Hello, thank you. So my name is Martin Nagel, and I'm an advisor to the CEO of Masdar, which is a UAE entity which has been investing in renewables since 2006. And I would like to ask the question, I mean, if we take the guarantees, we know that the key here is to decouple the project risk from the sovereign risk rating. If you go with the sovereign risk rating for a project, if you use the capital asset pricing model like you're supposed to, you end up with a very high cost of equity, which will make the electricity unfairly expensive. And I'm wondering, has it been given any thought to create a regulatory standard for the countries that you are providing support or financing to? Something they can aspire against that will enable them to do this decoupling on their own. Because if you look at solar power today, it's the cheapest cost of electricity by far. It's affordable, it's extremely affordable. But the repayment time is so low. So you need to create these bankable conditions. And with the right measurements, you can decouple the electricity sector from the sovereign risk or the sovereign sector, the fiscal part of the economy, by giving it its own life. So the question I'm really posing to you, has thoughts been given to creating a roadmap for this, defining a standard, helping countries make that transition on their own, perhaps with the guarantees to start out with, but with the end objective of them being autonomous in this process. Thank you.
Excellent question, and we'll come back to that. One more question, please. Anyone? Ma'am?
Okay, thank you. I'm Maya from PLN Indonesia. So actually, I have one MEGA guaranteed facility back in 2020, 500 million. I think that's a very good instrument that we have the option from the MEGA, because previously PLN has been engaged with the World Bank for decades, but usually it's under the two-step loans, it's G2G and then on lended to PLN, or direct lending with government guarantee. So it's an IBRD loan, but has to be direct guaranteed from the government. So I think I just want to share with everyone as well how MEGA really help us to de-risk our financing, especially because we want to explore more on the commercial side, not only on the development bank. But of course, you mentioned earlier that development bank also assist us a lot in terms of the project preparation and technical assistance. But from us, it will be great if MEGA can also give the how to say, the flexibility of providing a longer term financing, especially when we are entering into more renewable energy projects where the span is actually decades as well. So it'd be also a good option for PLN if MEGA can also assist us on providing those kind of instruments. Thank you.
I'm glad you're asking this question. We have our managing director here. So every request for MEGA to innovate is a good request that I can take to my managing director. On the question of setting standards, that's precisely the point. I think all of us are involved in lending or guaranteeing, investing in nations so that their own systems can improve, that they're able to set the standard. So for example, in India, IBRD lent to State Bank of India for solar rooftop, commercial and industrial. Within 3 to 4 years, private market boomed. And MEGA was able to come in and swap the IBRD, development finance, into market finance. In other words, standards were being developed. Today in South Africa started off by using de-risking for the generation. Today they don't need that. They need that for the transmission, right? So the question is, how do you actually help countries begin to create standards that will enable them to go to the market themselves? The second point is breaking the sovereign rating, if you will. Projects can be ring-fenced and can be made credit-worthy that it pierces the sovereign rating, right? That is something that depends on how that specific project is done. But there are many examples of that is happening. Maybe I can ask IDB whether you have your own experience of how countries' own standards are being improved.
No, that's first what you said. No, all of us in the MDB world, be IDB, World Bank, our goal is not to stay engaged on the same thing forever. Is to help countries to develop their own ways. But obviously that varies from country to country, sector to sector. Going to the point that was just raised on decoupling a project or a sector from country rating, it's really dependent on a number of factors. In our region, it's often dependent on the foreign exchange revenue stream of the sector. So you talk about energy. In most countries in Latin America, that's harder to do because, with the exception of 2 or 3, the energy market is in local currency. So most of these companies do not have foreign revenues. In sectors like agro, for instance, or export sectors, we lend alongside the IFC to some manufacturing companies in Brazil that are totally decoupled because a very large share of their production is for export in dollars. So you are able to decouple not only in terms of the percentage of export, but also on the extent that they have a much larger market beyond their own market. So it really is dependent on the sector, but the end result is that all of us in the MDB world, and the example in South Africa is a good one, same thing happening in Brazil, that they don't need guarantees, or that they have been able to graduate in the sense on the generation. They're now looking at transmission and distribution as the next challenge. So that's the goal, is to help countries to develop their own frameworks and standards so that they can progressively be less dependent on MFI, on DFIs, and to develop those projects.
If I could ask in the context of Africa, often one, I think unfairly, looks at Africa and says that's where the risk is the highest. From your perspective, how have countries begun to evolve their systems to, in effect, lower the risk perceptions that may be misread by markets?
First, before I get to that, and in that discussion, I think we need to differentiate an obligo risk rating to a facility risk rating. That's the obligo risk rating that would take into account the country rating. I mean, if you're operating in a country, you cannot have a rate better than the country where you operate. That's the obligo risk rating. But the facility risk rating is the way you structure it. That's right. And that structuring can depend on other tools, and including, MIGA. Now, coming to the risk, the perception. That perception that if you want to look at a risk, go to Africa. That's the perception. I come from an investment and commercial background, and I've spent 30 years learning that when you look at political risk, you look at NECT: nationalization, expropriation, convertibility, and transferability. That's what we've learned. Frankly, if I look at Africa today, and if I base it on that, that's not the area where you need to go if you're looking at risk. Obviously, we do have our issues, and we're working on that. Lucky enough, the regulatory framework has improved very much. Lucky enough, the governance has also improved. So basically, we're not just sitting there and saying, trust us. We're also changing the environment, the overall control environment, and basically making sure that banks like us, regional banks, and that's where I wanted to land actually. If you want to finance in Africa, if you want to invest in Africa, rely on the regional banks. We know the credit risk pretty much. We know them. I'll just take our example as we have in our shareholding capital the governments, the 8 states of the WAMU countries. So they're both our clients and our shareholders. So when it doesn't work credit-wise, what do? You go and see your shareholder. So, but that's the same person. So that's why we have this preferred credit status. And then we don't, I mean, if I look at my portfolio today, I'm basically talking about less than, around 2% of NPL. 2% of NPL, which is not bad for a regional development bank. So yes, we need to make sure that we improve the governance. We need to make sure that we improve the regulatory framework. And we need to integrate more and go into not having country type of regulatory, but, take it wider at the regional level and at the Africa level. But at the end of the day, I think that perception also needs to change. And the way investors are looking at Africa, that need to change. And I have to admit that it is changing.
It is changing.
It is changing.
No, I fully agree. And something you said that was important. MIGA's ability to partner with you, for example, in BOAD, enables us to piggyback on your capacity to reach countries that we are unable to reach, or we are unable to actually assess the risk. And your knowledge at the regional level, IDBs, similarly, I think is extremely important. Minister, if I could ask you from government's perspective, how are you investing in actually de-risking yourselves as opposed to using others to help de-risk the markets? What are the specific areas that you are investing as government to enable you to reach markets more directly?
too many things are done, but one thing is that that's the specific to our economy is the still some part of domination of SOEs and SOBs. So if you invest in transforming the SOEs and SOBs, so it was also partially answered. So they will be able, more sustainable and independent to borrow themselves and use, the international guarantee schemes as well. So instead of, so you will start, it will bring a less burden to the government of sovereign borrowing, so now they will be independent. So more investment in the SOEs and the SOBs, I think it will help us to use more and more widely, the guarantee schemes.
And I think that message is extremely important because what MIGA and other MDBs do in de-risking is not to avoid the, if you will, creating more bankability of the SOEs and state-owned financial institutions. It's precisely to work with governments and enable and give governments the time and space to be able to do that.
Exactly, yeah.
And that's a very important element of this linkage. We still seem to have a bit of time. Any other questions? I want to say that on PLN we have a seminar tomorrow, if I'm not wrong. Right. So we look forward to having a greater discussion on that. Please.
Thank you very much for organizing this. Thanks to the Deputy Minister from Uzbekistan. I'd like to raise a point, very important. Here you're trying to promote the knowledge that countries should use the World Bank, MIGA, to develop their industries, especially power sector and other PPP projects. Here I'd like to make to draw your attention to another side of the problem, is developing those projects too much, too many, okay? Because I think that when a country gets the sense of how doing this, they can do it too much. And these things have been observed in Turkey when they signed too many power purchase agreements. And it was observed in Pakistan when they signed also too many power purchase, and especially the agreements with the grid. And now they're having trouble, actually. And Turkey had to spend a lot of money to buy itself out of some of the PPAs. So I'd like to draw your attention into this part of the problem, because when the country, once they learn how to do it, they do it too much. They can't do it. There is a risk of doing too much of that, and then they find themselves in this. When I talked to the chief economist of ADB and other financial institutions, I tried to draw their attention to this. I said, is there any study, academic study that was done to see how much of indirect PPP obligations can a government or nation can take on itself in proportion to the national debt or to the GDP? Okay, this is very important, because if the GDP is low but they borrow too many, they commit into too many PPP projects, which become very large, it can get out of control. So my suggestion, please look into that part too, okay? Yeah, they should start walking, but then when they learn the walking, they do the running, okay? Here, you need to be stopping them from running, okay? There should be some pace into this.
So I think it's a very important point. I think all nations, when they borrow, there's a limit to their borrowing. All nations, when they begin to do public-private partnerships, they're limited by the sectors, their capacity, and what your point is, that MDB is working on that has to support the country's own capacity to manage that process. Very fair point. And I think it is a reminder that guarantees are not there to compensate and to create excessive. It's actually work with governments to build their capacity. Ladies and gentlemen, thank you very much for joining us to this wonderful panel. And I conclude with that simple statement that the world of finance, development finance, has changed. Countries are going into markets, but for markets to come in at scale, the use of guarantees, de-risking, in partnership with regional banks that have capacity and knowledge. This linkage, I think, is a linkage that's going to grow and is going to play a very big role in what, Deputy Minister, you have said of the growing needs in infrastructure and other areas. I think the linkage between de-risking and development finance institutions with the support of MDBs is a storyline that will indeed grow. Thank you very much. Thank you again.